Hello everyone, it's Davide here and welcome back to Learning Finance. So today we are gonna talk about the oil price that is going up, and I want to give you an update on my oil stocks investment. So we are gonna talk about XOM, Exxon Mobil, PAA All American Pipelines, and I'm gonna talk to you as well about NAT. So if you are interested, just leave me a like, that's the only thing I ask you, and subscribe to the channel, and let's begin. So okay guys, as we can see now, everyone is crazy about the oil price. The oil price is going up. Here we have the Brent crude near $30 per barrel. And basically, yeah, we all know we had this oil crisis due to the lockdown situation, due to the shutdown of the global economy, and due to the war with in the oil production with Russia and Arabia. Okay, now this last problem, it looks like, has been solved with the OPEC plus agreement. So they cut the production, and this is back in at the end of April. And right now, what is positive about it is that, for example, here it's Europe. We are starting to try to reopen the economy. Okay, so in Europe, we have now 11 countries. They are beginning to lift the lockdowns. So one of them is Italy, so I know pretty well about that. And we have Germany and all the stuff, Portugal. And the same stuff they are talking about in US. Okay, now in US it looks like the problem is still a little bit bigger, because in US this problem came later than Europe, so it's just a time problem. But they are talking about a reopening policies in US as well. And here you have the CNN, here you have like the dates for all the states. Okay, so here, depending on where you live, here you have your information, and it looks like they are pretty soon. Okay, so the market investors are hopeful, and that basically drove the oil price up. Okay, here we begin with some speculations. They could be the beginning of a tremendous oil rally. Is this the right time to buy oil? All this kind of stuff. But let's take a look at the graph, what we have here. So guys, that's the crude oil future, and we can see that basically now we are not going to consider the spike down in the negative -30, because it doesn't make sense. Okay, that one is basically you are shifting from a future contract with a maturity, and you're shifting to another maturity. Okay, so and in the middle you have this expiration where you have physical delivery, and no one wanted that physical delivery at that moment, and that's what happened. But we can consider a low price of $6.50. Okay, so if we take the bottom to where we are now, we can see that the oil price went up almost 300%, 288.19. So now the question is what to do now, and if you are invested in oil, or it's not my case, I am invested in oil stocks. Okay, so let's take a look at my oil stocks. So the first oil stocks I have, as you know, I made a video about that. If you haven't already, go to check it out. PAA, Plains All American Pipeline. And as you can see from the screenshot here, I bought around $5.14. That means that right now I'm up around 60%, and at the top here was like almost 80%. Okay, so what am I doing now, and why did I buy Plains All American Pipeline in the first place? So as I showed you in that video, I'm gonna summarize briefly here. PAA American Pipeline is not an oil producer, okay? So it's not involved directly in the production of oil. Uh, All American Pipeline is mainly involved in transportations and facilities, supply and logistics. So the main part of the business is transportation. So that pipelines, okay, basically they are bringing oil, crude oil, natural gas from the place to another, and they have a lot of pipelines all around the US and Canada, okay, so it's in the north part, okay, and they have also facilities so they can do oil storage, okay. So my idea was that basically I was back in March, because when I bought the stocks was around 20th of March. Okay, so my idea was like, okay, now we have this crisis and no demand for oil, absolutely not. And on the other side, we have this war with productions. So we are going to have a lot of oil and no one wants it. So guess what? You need to keep the oil somewhere. And so you need facilities and you need to store the oil somewhere. Guess a lot of demand for storages will push the fees higher. And so I said, well, PAA has been completely destroyed because, yes, here basically we went down from 90.39 to around $3. So that's a minus 84.53%, which is crazy. And I was looking at that and I said, well, you know what? In my opinion, if we have this kind of huge demand for oil storages, those guys, they're gonna make some money, make some cash, and probably they will cover part of the losses in oil transportations. Okay, I looked at the balance sheet and I did some fundamentals analysis, and I realized that basically at the point the oil was, in terms of book to value, was super undervalued and was not so bad. Okay, in terms of current ratio, okay, it was below 1 but almost 1. And in my opinion, wow, it was interesting. Okay, it was very interesting. And we had, at that point, we had a book to value when I bought the stocks, it was 0.28, which is absolutely crazy. It means that it's a discount of almost 72% on the industry. So it's crazy. It's like on the stock market, you can buy the entire industry at a 72% of discount at the moment when I bought, and you can sell the asset on the market and basically make money. Okay, so that why it was undervalued in terms of balance sheet. And I also did a cash flow analysis, very guess in a bad scenario with a very high interest yield, because I discounted for a 20% interest, which is very high considering that the market usually gives you 88%. Okay, so it's more than the double. Very conservative scenario, very conservative analysis. And even if it was super conservative, here I say, well, you know what, they made 1,300,000,000 of revenues in 2019. I say, well, you know what, next year 0, and starting from 2021 they are gonna make 200 million and 700 million. So, and go further to 2025, where they are not gonna make, not even 5 years later, the same amount as they were making before. So very, very conservative. And even with this super bad conservative scenario, the theoretical price we discounted at 20% was still higher than the price on the market, because at the moment the price on the market was around $5. So it was very at a discount. And I say, well, you know what, guys, let's buy it. And I bought the stock. So what am I doing now? What am I doing now with this stock? Well, honestly, guys, am I selling? Absolutely not. Not even one share. Why? Because you know what? I have a good entry price, and I believe Plains or American Pipeline, if we are going through a reopening season, it could go, yeah, up to $12, $13 during the next couple of years, $14 as well. So I am absolutely not selling any stocks. And remember that if you look at the balance sheet, the share price of the balance sheet to the book to value share price is $18. Okay, so that is just to respect the balance sheet value of the company. I'm not saying that we are going back to 18, but I would not be surprised to see the stocks around 14 bucks during the next couple of years. So I am absolutely holding every single share that I have. The next one, guys, Exxon Mobil. I bought the shares around $34.76. Here you have the screenshot. And now I'm up on this stock as well. I'm up 29% at the price of today. So yeah, why I bought these shares? Well, Exxon Mobil and Chevron Corporation. So they are the only two oil stocks that are dividend aristocrat. ExxonMobil is 37 years in a row that it's increasing their dividends, while Chevron Corporation, I think it's like 31 or 32. So why I bought this share? Well, it's one of the biggest oil company in US. It's an oil producer with plants all around the world. So they have a wonderful geographic diversification, okay? And they are not just based in US, they are based all around the world, so they can avoid problem if just one country has a problem, and they can just average the production price down, because as you can imagine, not in all the country the oil has the same production cost. Okay. Anyway, why I bought ExxonMobil? Because at that time I said, well, you know what? In my opinion, they are not gonna cut the dividend. It's 37 years, and they are not gonna ruin this record now. That's what my thought. And why I say that? ExxonMobil this year had the first loss in 32 years. That's crazy, guys. The first loss in 32 years. I said, well, they can afford to lose 1 year. Okay, they are not gonna go down. They are gonna pass this moment. And ExxonMobil basically has all the oil industries related stocks. It is basically they have a lot of debt. Okay, because that's how they work. So you cannot expect to find a current ratio which is okay, because those guys they work for the long run. Okay, so in the short term, basically they have a lot of debt, because that's how they work. You're not gonna find a lot of cash in stocks like that, but you have to look at total assets and total liabilities. And ExxonMobil has a ratio more than 2. That means that it has more than the double of assets comparing with liabilities. And it's not finished here, because those guys, they have the lowest debt to equity ratio just after Chevron Corporation. So they are the two lowest debt to equity ratio in the entire oil industry of oil producers. And the shareholders' equity is going up more than how the long-term debt is going up. And that's also very important, okay? So what that means is that even if right now things are bad, in my opinion, they can keep the dividend, okay? Because if they need, they can sell something to make it true. So they don't lose the 37 years record of dividend aristocrat, okay? And another thing that I really like about ExxonMobil is that those guys, comparing with all the oil stocks in the same industry, they have invested a lot of money during the last 3 to 4 years to create new plants and new places for oil production and extraction around the world. Now, remember, in this industry, you see the results after 2, 3, 4 years. So I bought the stock at $34.76. If we consider that they are not gonna cut the dividend, and probably they are gonna increase it in the last quarter, so they are able to keep this record of dividend aristocrats. Let's say even if they don't increase it, but they just keep it, that's the dividend per share you get at the end of the year, $3.48. Considering that I bought the shares at 34.76, that means that I locked a dividend of 10.01%. Okay, with one of the biggest oil companies that is also a dividend aristocrat since 37 years in a row. Okay, so yeah, I'm really happy with this investment as well. Am I planning to sell some stocks now that I'm in profit? Absolutely no. I think that over the long run, the stock price can go high a little bit more, and even if it doesn't go up super huge, I'm pretty happy, because if they don't cut the dividend, which I'm very confident they won't cut the dividend, I will have a 10% dividend every single year from this stock. Okay, so I'm very, very, very happy about that. And now the last one, guys, I want to talk with you. Nordic American tanker, NAT, and ticker symbol NAT. Did I buy this stock? And absolutely no. Okay, absolutely no. Why I didn't? Now we are gonna see that. That's the stock price. Let's see, North American. Look at that. That looks like Bitcoin, okay? Market cap under 1 billion, 700 millions. Why I didn't buy this stock? Well, that's pretty simple. Because this was a trade, not an investment, okay? This was a short-term trade. Wonderful trade, but not an investment, because Nordic American tanker is a stock that absolutely no one knew before, and it became popular because of the oil demand went to zero, and the oil storage demand went skyrocketed. Okay, so what happened is that basically those guys, they were making money because they kept ship in the sea, okay, storing oil barrels. But now, if the world come back to normal, what happened? Guess what happened? They will not make money from this anymore, okay? If we go back to normal, and that's what the market understood. After a while, they say, well, you know what? We are reopening, we don't need you anymore, and the stock is going down. So that's the problem with NAT, okay? That's why I didn't buy it. I didn't buy it because I knew that was a trade. That was a wonderful trade, because a trade like that, if you are a trader and if you bought NAT around, basically when I bought All American Pipeline and Exxon Mobil, well, that was huge, okay? That was absolutely huge, because that's almost, again, a 300% of profit. But you know what? Is that an investment? Is that something that I will put in my portfolio over the long run? No. And that's why I didn't buy it. What's the difference with plain All American Pipeline? The difference here is that the facilities part of the business, it's a small percentage comparing to the transportation business. So that facilities are basically helping the company to not lose too much money during these quarters, during these lockdown quarters where there is no demand for transportation. It's like, you know, it's like a cover, okay? It's like you don't have this, but you have this. Well, and you can copy with that, and it's fine. But once you don't have this, or this is gonna decrease, well, you have your main business. So that's the main difference. While in the case of NAT, the only reason why they were making a lot of money was just because of storages. Once storages decline, well, they're not gonna make so much money. While once storages decline, they are gonna make more money because of their main business can start back. Okay, so that's a very huge difference. Okay guys, so this is the end of the video. I hope you like it, and leave me a like if you find this video interesting, and leave me a comment below with what do you think. I mean, do you have some oil stocks? Did you sell some oil stocks, or are you holding some oil stocks? Subscribe to the channel and have a wonderful day, guys.